Okay, the recorder is on, and when we're finished with the recorder today, I don't know if I'll get it done today, but it'll be done tomorrow, and then we'll post it out there. Thank you, everybody. Thanks for being here. Thanks for everyone saying hello. Could you guys do me a favor and just type your membership, whether you're with Hit and Run Candlesticks, Right Way Options, or BYOB? Just a little curiosity is all, because I don't know that by looking at here. That'd be great. Just want to see everyone here. Cool. Thank you. Thank you. Look at that. Okay. All right. Way cool. Super. Super. Thank you. Thank you, everybody. Thank you very much. All right. Sweet. Sweet. Oh, wow. All right. BYOB, HRC, RWO. Okay. Look at all that. Thank you. For those that don't know, and it's been a bit, but I still get questions. I got one earlier this morning. Who is BYOB? Well, BYOB is part of the Right Way Options and Hit Run Candlestick family. Kind of a really good family of trading there, if you ask me. But that's what it is, okay? And for those that don't know what Right Way Options is, it's Doug Campbell runs it. Swing trade, position trade, mostly options, and I trade strictly. When I trade options, I trade strictly directional, very easy, very simple, either puts or calls. Okay, with that said, now I can say Doug trades more complicated, and I don't mean complicated like they're hard, okay? I just more complicated than simple calls and puts, all right? Okay, again, thank you everybody for being here. One thing I would like to make sure of today is I have a chart pattern that I want to share with you. I want to show this to you, and I need your help. I'm trying to figure out a name for it, so if you have, once you see it all, if you have a name, I would appreciate it. If you type it in the chat, there's not a lot I can do. If you want to send me a private message, however, I can keep that. Okay, so, or if you want to send me an email, you can do that too. Just rick@ricksadler.com. That's my personal one. You can send it there. But I really am looking for a name for this, and I will get to it in a minute. Couple of things I want to talk to first is the market. Let's start with the market, and I'm going to start with the SPY. This morning, oh wait, I'm going to start over here. And let me rephrase the way I'm going to start things here. So just something to think about, okay? Something to think about. What is bearish to you? And you're more than welcome to type something if you like. In fact, that would be great. You know, if you feel like you want to describe what is bearish to you. Also, what is bullish to you? What does that mean to you? What is that? What is bearish? What is bullish? This is something that I think every trader should have defined. What is bullish? What is bearish? And some people, and I know this for sure, but there's at least two people in the room, I'll bet on it because it's just a numbers game, that, they've actually stopped for a second. What the hell is bullish? What is bearish? What is it? And that's something you have to decide. I can't particularly decide that for you. You can't decide it for me. You have to decide it with your own trading. Now, I'm going to share with you how I decide it because I want to leave everything out other than the chart. I want to leave, any politics out, any news out, anything out. Leave all that out. I don't care about all that. I care about the charts, what I trade. So here's what I see as bullish. When that white line is over those dots and those dots are green, I'm bullish. When that white line is below those red dots, I'm bearish. I can do this in any time frame I want to. Any time frame, 15 minute, doesn't matter. Weekly. I can do this in a weekly. I am bullish when the white line is over those dots, and those dots will be green at that point. I'm bullish. When the white line is below the dots, and the dots will be red if the white line is below that, I will be bearish. I don't care about the news. I don't care what's going on out there. I don't need to know anything. I don't even need to know that the SPY might be approaching a top, or FNGU, which we'll go look at that in a second, might be approaching a top. I don't need to know that. I just need to know what the trend is doing, okay? Because approaching a top, approaching resistance, approaching a speed bump, that is a different conversation. That does not change the trend. Yes, Al, the white line, that's the 8 or the T line, yes. And the green dots, by the way, all that is the 17 exponential moving average. There's nothing magic about that. There's nothing magic about the T line. What's magic is I consistently use it day in and day out, over and over and over. One second. Okay, I've kicked the recorder back on. Again, thank you, everybody. So there is nothing magic about those two moving averages or any moving averages or any indicator. What's magic is how consistent you use it. That's what makes it magic, okay? Now let's come over here and let's take a look at the SPY. This morning, I mentioned to everybody in the pre-market chat that we're getting a little toppy. Now, I think we're as bullish as all sin, okay? So let's just clear that up right now. I'm about as bullish can possibly get. Yesterday at the close, I had mentioned that above 413.40, that line right there, I think that's a good thing. If we can just hold that. I don't really care what the candle does, just hold that. So if we were to fail that, now I might take some of that bullishness off the table for sure. But right now, I'm about as bullish gets. There's a little, what I call a speed bump. Resistance, speed bump, kind of the same thing, but they sort of mean different things. It's the way we've been trained. We've been trained that resistance, oh my gosh, which you all know, I'm going to say, oh my God. That's what we do. We've been trained to fear resistance. We've been trained to fear double tops. And the truth of it is, you can go back all through charts, all day long, all week long, all month long, and you will see that price continually breaks out of resistance and continually breaks out of double tops. May take a couple days, a week, might even have to bend over a little bit and come back down, but it continually does that. Now, also, double tops, resistance, also fails many times to the downside. Many, many times. So it's not to be feared, it's to be reckoned with. It's to be traded. It's to be, attack it with some logic. Attack it with what you know, not with fear. Don't attack it with fear. Another thing too is when you, now I trade predominantly from a daily chart, and I'm kind of betting that Hit and Run Candlestick members, the majority of people probably trade from a daily chart. I'm kind of betting that Right Way Options, you probably trade from a daily chart, maybe a weekly chart. BYOB, you guys are all about 10-minute charts, 15-minute charts. You guys are all about that. So this next part might not be necessarily for BYOB traders, for day traders. When you're looking at a daily chart and you're trying to evaluate what's going on, a 15-minute chart is about as worthless as tits on a boar hog. How's that? Seriously, it is. 15-minute chart can come all the way down. And you know what? It looks like the world's coming to an end. Boom. Let's just go down to our 413.40 level. All right? So let's say that 15-minute chart does that. Look at the daily chart. If we came down to that level, there's not one stinking thing wrong with this chart. Not one single stinking thing. Nothing. So I'm not saying don't look at the 15-minute chart, okay? That's not what I'm saying. I'm just saying if you're going to follow a daily chart, follow a daily chart. Don't get halfway into the game and all of a sudden follow an intraday chart because an intraday chart pulls back. Well, good Lord, every single day that happens. Man, that just can't be good on a person. It just can't be. Now, again, don't get me wrong. In fact, somebody set it up here. Somebody said it. I know it's Trader X. Level to be watched. Yes, absolutely. It's a speed bump. Slow down. Tap the brakes. Don't give it gas for long or short. Tap the brakes a little bit. Here's what I think is probably the best chart out there today for the past week and most of the time in the stock market. And it's FNGU. All this is big tech. Look, big tech is running the road right now. It's just that simple. Big tech is doing it. Is it one company? Is it two company? Is it three company? Who cares? Now, I know somebody cares. I don't care. All I care is that I can trade and make some money. That's it. I don't care if Apple alone is doing this. I don't care. I don't care if Netflix is doing this. I don't care. As long as it goes up. As long as it works. Now, what happens when this crashes? I said that word. Words are important. Look, we're taught, look, words hurt, right? Don't tell people they're fat. Words hurt. Well, when you use words like tank, that hurts. Let's say tomorrow this was to do this. Oh man, FNGU tanked. How do you figure that tanked? That's a harsh word. Don't use words like that with yourself because you will learn, you will drag yourself down such a negative path. Tanked. Oh my God. Oh, that didn't tank. Crushed. Oh, it got crushed. How did it get crushed? That's not here. That's tank, folks. That's crushed. That's not tanked. That's not crushed. Ease up on how you say things to yourself. Be more positive, not as negative. And I'm not trying to be everything is rosy. No, believe me, not everything is rosy. I know that. But on the other hand, we can't go through a chart. Oh my God, it got crushed. How did it get crushed? That is the normal, everyday movement of a chart. Don't believe me? Stop looking at the hard right edge for a buy and just go look at that chart. Take a good, honest look at that chart. Go take a good, honest look at any chart you want to look at. Any chart you want to look at. That's not crushed. This is not crushed. This is not tanked. No, this is a normal movement on the chart. So be careful how you use words for yourself, okay? Now, I want to go back to FNGU because here's what I mentioned this morning during the pre-market. And then we're going to go look at some charts if I could type something right here. Oh, I am on FNGU. No wonder it's not going anywhere. This morning I mentioned we are getting very, very overbought in my personal opinion. I am very, very cautious here. Am I cautious because I think we're just going to come back down here? No. I'm cautious because I'm in positions that's making some really good money and I might want to take profits off. CJ, if you have a question about the SPY, please ask. You might I might want to take profits off. I know that we're overblown. Let's use some common sense. 1, 2, 3, 4 days up. 4 days up. I always count a gap as a day, by the way. 5 days, 6 days. 6 days up. Can it go higher? Of course it can. But my common sense indicator says take profits off the table. Take some profits off the table. Think about it. Go look at the chart and pick any chart you want. It really doesn't matter. But if you'll look up, couple 3, 4, 5 days down, right? Up, couple 3, 4, 5 days down. Up, couple 3, 4, 5 down. Up, couple 3, 4, 5 down. That is the normal, everyday movement of the stock market and of every chart out there. It breathes. Take your hand and hold it on your chest and just breathe normal. You can feel the inhale. You can feel the exhale. Inhale, exhale. That's what the market does. I don't know, whichever you want to call it. Maybe that's exhale, inhale, exhale, inhale, or however you want to do it. Okay, so my common sense indicator says ease up on some of those profits. Take them off the table, at least half. Put something in your pocket, okay? And it's the same thing. We talked about that with the SPY this morning. We're reaching that speed bump that says tap the brakes just a tad, just an itty bitty tad. All right, let's look in some charts. And what I want to do is I have a chart pattern that I want to share with you. And I'm going to start with, let's just take a look at AR. This was just phenomenal, but this came up on the chart pattern. I bought this morning. I just sold half of it a little while ago. What was it? 20. Where did I write that down at? Oh, it's up. It's in the other room. 25.6%. I'm currently up 30% on the second half. Tesla is another one that did that. Tesla bought it yesterday, sold half yesterday. Yeah, sold half yesterday. I'm still in the other half. UNG is one of these trades. UNG, I'm still holding that. I haven't sold anything, although when it gets up to about 750 up here, that's probably where I'm going to take some off the table, close that position out maybe. I don't know what I'm going to do for sure. But then I'm going to look to buy it back on the next setup. This is one of those trades. KRE, and I'll explain the trade pretty thoroughly here in a minute. KRE, I bought this yesterday, still holding it. It is one of those trades. Now, this is probably a trade that there's a whole lot of people thinking, holy crap, why do you buy, KRE? That's because I buy the chart is what I buy, and it's set up that way, and my risk is a couple percent, so I can handle that. All right, so things have been pretty good, working out pretty good. So let's talk about that trade, and let's go to we'll go to UN. No, let me pick a brand new one here. Let's take. Okay, let me describe the trade to you, and then this is the trade that I'm looking to be renamed. Everybody's familiar with the rounded bottom breakout. If you're not, sorry, today's not the day that I'm going to go into it. But that's where we're over the 50-period moving average, and we're looking for price to attack the direction of the 200-period moving average. The other one that you might be familiar with is the pinball setup, and a pinball setup would be, this would too, but I'm going to talk about this one. Pinball setup here, and we move up to the 34 EMA, and then you close your position out. You can make some really good money on this. This one especially for the lower price stocks. Just that's where this one really shines. Bigger price stocks, maybe not so much, but the smaller price stocks, because they act like options. You can have a $5 stock and it can move up 20-25%, boom, pretty quick, and it makes that pinball setup really nice. So we've got the pinball setup. You've got the rounded bottom breakout. I want to talk about the 3/8 trap, because that's all the rounded bottom breakout is. It's a trap. It's trapping price between the 50 and the 200. The pinball setup is a trap. It's trapping price between the T line and the 34 EMA. It's just price. There's no difference in this. This is the same thing. I would just like to call it something. I want to go back and just give just a minute or two, 2 minutes to 5 minutes of history of the whole trap idea. Years and years ago, I had a mentor that traded, at the time, I had no idea how I could put this with other things, and they always traded the 20 and the 50, the 20 and the 50. And they traded price just bouncing back and forth. If it failed, they would short, long. I didn't realize what they were doing. And I don't think they realized what they were doing compared to what we do today. I don't believe that. But it was just a great way to work. So the T-line or the 3/8 trap, and the 3/8 trap was kind of a group effort of myself, Doug, and Ed, kind of put the 3/8 trap together. And one person started talking about one thing, another thing. We put this together, before you know it, you got an ankle bone connected to the shin bone, connected to the knee bone. You've got one of those things going on. It has turned out to be probably the most fabulous entry mechanisms of everything we look at. It is probably the greatest entry mechanism, and you can put it in any chart you want, any place you want in a chart. Like I say, I can't talk enough about it for an entry mechanism. All right, so let's talk about this trade here, and I'm going to do a little poking around because I want to find one that's that I can explain. There we go. Perfect. So what this is utilizing the 50 period moving average. If you haven't figured it out right now, if you're new here, I use moving averages an awful lot, probably more than an awful lot, to tell you the truth. So it's the 50 period moving average, and it's the Trindicator, the red and green dots. The Trindicator, by the way, again, is nothing more than the 17 exponential moving average. You're more than welcome to use anything you want. You don't need to use the 17 here. I actually have a scan set up using the 20 simple as well. In fact, in the background, if you look really, really carefully, there's a little line right there, and that is the 20 simple. So I just have a scan set up looking for both the 1750 trap. That's what I've been calling it. I want another name for it. And you can set it up using the 20 if you want. I think that works really, really well as well. So what we're looking for is price to break out over that 17, and then we're looking for that entry, and we want it to attack the 50. So the trade is only this. That's it. Now, I'm not saying that this can't go higher. It could, absolutely. But once we reach this level, rethink the trade. I mean, you may decide to keep the trade on. There's nothing wrong with that. There's nothing, if we pop up, and more than likely, you get some sort of movement around that 50. If you decide to keep that trade on and it goes up higher, good for you. You raise your stop up, put your stop in just in case it starts to move down, because you want to protect your money there. Now, I look at that, and that is one complete trade. I don't usually keep mine. I'll usually sell it, because I'm of the attitude that up here I can put on another trade. That's just the type of trader I am. So to me, it's all about get in, take my money, reevaluate. Not, I don't get in, reevaluate, then take my money. I take my money first, then reevaluate. So T is asking, great question. So T, let's do this. T's asking, so where would you put your stop? I'm going to use this color for the trend indicator. So there's the trend indicator, right? And here's the 50 period moving average. My goal is to buy it close to the trend indicator. So where would my stop be? The trend indicator. Trading does not have to be hard. It really doesn't. And guys, I work my fanny off to make life easier for myself. But that's where I want to be buying. Let's do this. Let's see, will this work over here? Just a second. Nah, let's stay over here. So I'm going to remove price. I don't want to see price on this, okay, Carol? Look at those red dots. Clearly bearish. This is the T-line. T-line underneath red dots is bearish. I don't care what kind of candle is created here. I don't care what kind of candle pattern is created. Until those dots turn green, this chart's bearish. Until that line, that black line, moves over those red dots, this chart's bearish. And even when it moves over, I'm not trying to claim any kind of, oh, this chart is super bullish. That's not what I'm trying to do. We just get up here, I'm just looking for a trade up there. And in this case, at 11%, I'll take that. So here we are. What have we done? We've now turned green, right? So let's put a line there. All right. So Carol, you buy that, and you're wondering where you're going to put your stop. Well, let me ask you this. How happy are you going to be if price goes back below there and turns that dot red, knowing that you have a clear visual of what red dots could mean, right? So where's your stop? Let's start with the trend indicator. Start with that. And now what you might do is, let me put price back up. Now you can go in there and maybe use some price action if you want to be a little more precise, if you think that's more precise. You know, you could come down here and say, well, how about the low of today? That would be below the trend indicator dot, wouldn't it? Maybe you're into this second candle back. Maybe you want to go 50%. Maybe you're into the T-line and you want to work with that. You can look at price. You can come in here. Let's go to a 3-bar chart because I use a 3-bar chart a lot on stops. You can come in here and say, look, on the 3-bar chart, see where we come up? We kind of hold, and then break out. Well, that hold right there is pretty important. So how about I move my stop right here based on a 3-bar chart? On the daily chart, there we are. And it just coincidental, okay? Not that it's there. All right, so let's just utilize the fact that if we buy it close to the trend indicator, use the trend indicator as a, you're getting close to your stop. Make sense? Oh, that was T. Sorry, Carol. Where would you put? Where would you get in on BAC? That's what Carol is asking. Well, how about right now? What would be wrong with right now getting into it? Anything? Why not? How far are we from our danger zone? Let's try not to use the word stop for a moment. Let's try to figure out another word. How far are we from I don't like this chart? You know, how far are we? So let's say you buy it right now. And let's just go down to today's low, okay? Because I wouldn't put mine any higher than that. So can I afford, say, under 2.5% for a stop? So why would I not want to buy that here? Why would I want to not buy it? I would. Now, I'm not going to buy BANC, but we're just looking at the chart here, okay? Let's see if we can find another one. How about SJT? Look at that one. Look at that. Beautiful. One of the favorite charts of a lot of people here is called a pop out of the box. There's your pop out of the box right there. Beautiful. Let's look at the potential. And by the way, whenever I measure this particular trade, I always measure from the trend indicator, never from the candle. Excuse me. I always measure from the trend indicator. It's just easier to do. So you got 15%. So, reality is probably more to 14%, maybe even a little less. So there's what I'm looking at for a possible gain on this. For a stop, so if we buy it about right there, put my stop about right there, about 4%. Is that worth the trade? If not, I can, if you like the trade, you can raise this up if you want. Now you're under 2.5% for a stop. Let me get rid of all that. See how the trade has gone, or the chart, I guess, not the trade. We've gone from a bottom, we've rallied up, and for the most part, just moved sideways. Just like that. I think that is a gorgeous looking chart right in there. Now, I just noticed that I'm not paying attention to tickers or anything. This is an energy chart. Here's this AR. See how AR, we went up, pulled back. See why I might have bought it right in here today? This is just, I just got lucky on this one today. I'm not going to claim any magical anything here. This is just flat luck. I just happened to be at the right place at the right time. Thanks, Ed. Where is the top of your box? You can't see it. Top of my box. I don't have any kind of box on it, Carol. I've taken half the profits off already, and I don't know that I'm going to keep this today. I don't know that. It's just too good there. Need to take those monies off. Oh, on ST. Sorry. ST. Top of your box. So, I'm going to use this is not it, SJT. There we go. I'm always going to use the 50 period moving average. The whole trade is about the 50 period moving average and the trend indicator, the 17 EMA, or the 20 simple, if somebody uses the 20 simple. That's what it is right there. It's all about that. So that's the top of my box. That's my target. Now, again, I'm not saying it can't go higher. It can. But if I can just put this trade right here together, I'm just as happy as can be. Absolutely happy. So Jim wants to know the trigger on AR. What got me into it? Okay. So I think this was the scan here. So I use LTA, live trading alerts, for those that don't know. Some of you absolutely know that. So I saw this starting to come up, that AR starting to come up on this, and I went and looked at it, and at the time, those in the room, they vouch for this. This is just a nitty bitty little candle down here. Just like that right there. It was, so now let's go look at, what does this look like? There we go. All right, there's the same trade. There's the same trade right there. So here's the candle. That might be my trigger. I saw a chart where this one is a little different than the AR, where AR went up and back, and then we had that early morning candle right there. Everybody, please, I hope you know, favorite chart in the world for me is when a chart rallies up and it pulls back, and then I get a buy signal. That's my jam right there. That is my jam. So when I saw AR this morning, AR, up, pull back, itty bitty candle, what do I have to lose to give it a try? And you know, I want to stop right there because I think sometimes everybody takes trading way too serious. I really do. You know, this to work, that to be right, this to be good, you want that to be good. Well, good luck with all that. All right? In this day and age, it's not going to happen. If the charts look good, the world is pissing on you. If the world's not pissing on you, then the charts look good. Look, we are in a business that you do nothing but handle risk all day long. So it's about risk. Is this a chart I like? No questions. Absolutely. Little bitty candle right there. Why not take it? What's my risk? If I was to buy this there, my risk is a whopping 2%. Now, I don't mean to hurt anybody's feelings here, but if you can't afford to lose 2% in stock trading, this is the wrong business for you. Or maybe you're putting too much money into a position. Back it off a little bit. I was willing to take the risk. Every trade you take is nothing but risk. What are you willing to risk? I was willing to risk that. And like I say, every once in a while you get really, really lucky. And this one turned out just right. Okay. Let's see. Why did you buy there? Did I answer that, Jim? I hope. Rickster, Apple seems to fit your criteria. It does, yes. Yeah. It's not the same trade, but you're right. Apple fits my criteria. So why not go long Apple? And the reason, and we had this discussion in the room earlier, somebody else about Apple. I'm not going to go long Apple. And the reason I'm not, I just don't have that loving feeling about the market at this moment. I'm bullish on the market. I'm bullish, but my common sense indicator tells me 1, 2, 3, 4, 5, 6 bars is telling my common sense indicator, pump the brakes, dude. And that's why I'm not buying Apple. Because all it's going to take is for this to start moving down, it's going to take a couple of the big tech not going up. They don't even have to come down. They just have to stop going up. And this is going to come down. And if this comes down, just about everything you own is going to come down. Just about everything. So my common sense indicator is saying, today's not the day to be kicking butt out there. Today's a day to be protecting your butt. Keep your feet to yourself. That's what today is about. Now, if you've missed the last couple days and you're entering that fear of missing out, that little area, well, just get out of that area because that's going to hurt you. Timing. It's timing. And right now, the timing is telling me, and I could be wrong, okay? I mean, we could just keep going and going and going. I could be wrong. But I'd rather be wrong and keep the money I've made than risk the money I've made and make more. I would rather take what I have. So this is why I'm not buying Apple. Otherwise, I would be buying Apple. But I'm just not going to do it. And by the way, I think it's a fantastic setup. Absolutely fantastic. All right. Here, we have a few more. Let me make this stay on top. There we go. Let me move this down here. Let's see what it look like. So this one, see, this is too far gone. I'm not going to take that trade. No way. I'm not going to take that trade. FIVN. FIVN, I'm probably not going to take that trade. 1, 2, 3, 4. That's up too much. But you know what? What's wrong with putting something like this on the watch list and buy in this area right here? This is, man, this is a sweet looking chart. Just not a good day to buy. And all I would be happy with is a move up to that 50 period moving average. Let's look at MP. And look at MP. And I'm going to put this over here. This is the one using the 2050. Okay, 2050. So let me make my, is this it here? Yeah. There's the 50 period, or I'm sorry, the 20. And that's that green line right there. So this one is a little different, I think. I have this set up so that I believe yesterday has to be over the 50 period moving average. So this is what I think is a, and this is this is the mechanism for the pinball setup right here. And that's where you have to have a candle above what? The 20 period moving average. That's what I'm using for this scan. So above the 20, doesn't matter if it's bullish or bearish, white or black, red or green, doesn't matter. It just has to close up there. And then the next day, I want an inside day. And there you have your inside day. Now, somebody asked, how did I get alerted on AR? So let's say I'm watching this, and I see whatever this is, MP popping up. Well, if it's popping up, I know it's making a new day high. And I come to think about it, this may be set on 15-minute. No, it's not. Okay. All right. So if this thing starts popping up and we start breaking out, this candle turns white, I'll see it here, I'll make that entry. Because I already have the chart pattern. I already have in place the 50 period moving average, the 20, with the percent that I'm happy with. We've got a breakout of the 20 period moving average. And now I have an inside day, and I'm just simply waiting for it to get bullish. Now, you don't have to wait for it to get bullish. That's just a me thing. Yeah, that's just a me thing. I like it to be bullish. Let's see what MTB. Yeah, see, that one's gone too far. All right, let's see. Carol, what was, I have no idea what was before FIVN. Sorry, I don't. Is that the 20 and 50? This one is, yes. Yeah, that's the 20 and 50. Let's go hunting in here. Take CME. There's CME. Boom, right there. Here we are. Is this on the way to the 50 period moving average? Yeah, it looks like it to me. Now you just got to decide, well, is that a trade for you or not? Here's another one from another scan that I have, GTLB. Look how we're up. Is that going higher? Looks like it. Could it stop right here at the 50? It could. It could. I can't guarantee whether it is or not. Anyway, does that kind of make sense? And now everything here is slowed down. I can see that the market has really stalled out. I don't mean that negatively. I just mean it's quiet, very quiet. So anyway, I need a name for this chart setup. I need a name for this. And while you guys are doing that, I want to share this chart with you right here, okay? I love that chart pattern, but if there's a takeaway today, this is what I want you to take away. And that is just to follow the trend. Just follow the trend. That's all. Take everything else, take the newspaper, cancel it. Turn your radio off, turn the TV off, cancel it. Anytime you hear, just turn everything off and just follow the trend. That's all you have to do. Now, when the trend is down, trade down. When the trend is up, trade up. We can be all kinds of worried. We've got this whole debt ceiling thing still hanging over our head, right? Now, we all know, we're all grown-ups, and we all have some sort of common sense indicator. And that indicator should be telling you, look, the buffoons there, they're not going to let us go into fault, all right? It might get ugly before it gets there, yeah, but it's not going to happen. So why are we worried? Trade the trade you're trading. You know, are we going to get interest rates go higher? Well, we could. Damn, they've been going higher, and so has the market. See, all that stuff, it's right here in the chart. All the answers in the world are right here in the chart. Carol, I'm going to use you here as an example, all right? So, yesterday there was a person in the trading room. They were using Bollinger Bands. I'm going to actually do that. Put up some Bollinger Bands. Whoops, how did I do that? What did I do? I don't want that down there. Oh, I know what I did. Sorry. Let's try that again. There we go. Let's go right there. Candle. What in the world did I do wrong? Oh. Why didn't it come up? Add a plot. Bollinger Bands right there. There we are. All right. So Bollinger Bands, you can see them in the chart, right? Also volume, okay? So yesterday, there was a comment, somebody asked about Bollinger Bands, and you know, that chart looks good, but we're right at the top of a Bollinger Band. And jokingly, but I'm as serious as a poke in the eye. Let me show you how to solve that problem. Come right up here on TC2000, right click, and remove Bollinger Bands. Now you don't have that problem. Here, I'm going to get rid of all that too. Now you don't have that problem. There was a comment made this morning in the trading room, man, that chart looks good, but the volume is low. Here's how you solve that problem. Get rid of the volume. Everything in the world that you need to know about a chart is right there. That's it. Actually, it's this easy. Let's put price. Whoops. Move that over. That is all you need on a chart. Right there. Everything you need to know is right here. Everything. Volume doesn't matter. Not if you're a short-term swing trader. There may be cases where volume is important for somewhere, but not for what we do. Not important. I don't mean to pick on Bollinger Bands. What has Bollinger Bands got to do with the price of tea in China? It's all about price and the trend. What does politics have to do with your trading? Nothing. Because it will be reflected in the chart. You start dealing with oh, we're going to raise rates. You start dealing with banks are going to go south. You start dealing with debt ceiling. You start dealing with Putin. You start dealing with, oh, Europe is doing this or Russia's doing that. That all comes from your insides. That has nothing to do with what's between your ears. It's all comes from your insides. That's not how you trade from a chart. You trade from a chart with what's between your ears. What's between your ears you visually see with your two eyeballs. Or maybe for some of you only one eyeball. I don't know. Okay? Everything is right here. Everything. And if we just simply follow the chart, very easy, it's very calm, it's extremely visual. I'm going to remove price. There we go. Let's do this. Well, most of these probably will be on the bullish side. Maybe not all. I'm going to move this over here. There we go. Is that bullish or bearish? Remember, we're a short-term swing trader. I know if you want to draw trend lines, clearly it's in a downtrend. For a trade, that's bullish. For a trade, that's bullish. For a trade, that's bullish. DKNG, for a trade, that's bullish. For a trade, that's bullish. For a trade, this might be turning bearish. Here, I can go find some. BROS. For a trade, that's bearish. CPT. For a trade, that's bearish. For a trade, that's bullish. See how easy it is when you follow the chart? It is so easy. Who cares? If say tomorrow, there's some numbers that come out tomorrow. If those numbers freak you out, close your position, everything before tomorrow, because there's nothing that's going to help you. You could put stops in. What's your level? If you're freaking out over CPI numbers, then close everything out before CPI numbers. Trading is not hard. Trading is easy. Super, super easy. CMCSA, a bullish trade. UE, a bearish trade. Piece of cake. Now, I want to stop right here because we'll use this one. So this is really simple, right? When it's green, you're bullish. When it's red, you're bearish. But what about in between? Okay, in between is chop. Don't trade. Seriously, don't trade. You see how we turn green right here? Don't trade. Wait till the white goes above the green. Now trade. See how the red turned red and red here? Don't go short. You could go short here if you want, I guess. Didn't work out so well for the short term. Overall, it worked out. So what I'm trying to show you here is where chop zones are. Chop zones are at the turns. Doesn't matter if the turn is down here going up or if the turn is up high going down. The turns are the chop zone. Let the trend go. Let it prove itself and then trade. Follow the trend. Follow the trend. Okay. Let's see. Rickster. How about the red-green show? 1, 2, 3. 1 is a low, 2 is a high, 3. I'm not sure what you mean. I know what the red-green show is. I'm not sure what you mean by the 1, 2, 3. Let's see. BR, how do you set up the 17 to change colors? BR, do you have TC 2000? Yeah. I don't have time to do it right now. But BR, where do you hang out during the day? Which trading room? I would be more than happy to come in and share. Doug can certainly show you in the right way options. I don't know if John knows how to do it, and I'd be glad to come in there and do it. And I'd, of course, do it the hit and run, okay? I just don't have the time right now. I've got to start winding down. But real easy, absolutely be thrilled to show you. And there's actually a YouTube video on it. You could go to my YouTube channel and maybe type in trend indicator, but I'll be glad to show you, okay? Let's see, Alpha Dog, the white line is the T line. I can't, black background, can't use a black line, so it's the T line there. All right, let's go back here for a minute, and let's get back to sort of, kind of something. Let's look at TFC. Why wouldn't that be a trade for somebody? Now, I get it if it's not. Look, if you're if you're all about, oh man, we're in a downtrend, I'm not trying to change you, okay? I get that. I get that. And all this is a relief rally in a downtrend. So believe me, I absolutely accept the fact that this is a downtrend. I'm willing to look past that because, and whether or not, because is the right answer. I mean, this is why I do it. My trade setup is when red turns to green and we have enough, I can make enough money to the 50 period moving average. So if you think about it, I'm just looking for a relief rally to the 50, and you know what? It might fail and be a great short from there. So I'm not looking for any kind of, super duper, hey, this is the bottom kind of thing. Not at all. Not at all. So look at Dino. Look at Dino. Look at that. Boom. Nice. BKU. Look at BKU. Oh, here's one. DPST. Who bought this? Who? Anybody here in DPST? Yeah, I am too. I bought this yesterday. One of our members have been in it from down here. They like doing that. I can't do that, but I bought into it yesterday. And this is one of those charts. Here we are up. Now, this is, I know it hasn't turned green yet. I'm not 100% sure why, but that's not for me to decide. We are over it. We closed over the trend indicator yesterday. We're over the, well, there, that just turned, it's trying to, there it goes, look, go a little green, go. So here we are, 37% to the 50 period moving average. Sweet. I'm willing to take that risk. But wait, it's in a downtrend, right? It's in a downtrend, right? And what's the news? I don't know, because I don't listen to that crap. And me, how do I solve this problem? Just delete it. Follow your chart now. Just follow the chart. Just follow the chart. Okay, where are we here? Alpha. I'm also long KRE. Yeah, that's one of those. Yeah, I'm long KRE. Closed up over the trend indicator yesterday. You've got that inside day thing going on today. All I'm doing is looking for a relief rally. Yeah. Let's see, Michael, are you trading stock or options in these? I trade 99% options. I believe that DPST is a stock buy, though. Yeah, that DPST is a stock buy. But hands down, I probably trade more options than stock. Hands down. Dash. Dash looks nice. Dash is looking good. So anyway, wow, I just noticed my AR still going. Yeah, I'm gonna close this out the second half. I'm not gonna keep it overnight too much, so it'll be about 34%. Still 5 contracts left, be $525 on the second half, so looking good there. Anyway, I've got to wrap this up. Please, if anyone has a name for this chart strategy setup, otherwise I'm going to keep it 1750. And if I can't come up with something clever, that's about as clever as I'm going to get with it. Yeah, we'll just leave that. Thank you, Phil. Thank you very much. Hey, I want to thank everybody here. I appreciate it. Thank you so much for being here. And I'm going to close this up. We're going to get out of here. I'm going to get this recording done. I'll get this recorded, posted on the members side. This is a members webinar for both members and trial members of Right Way Options, BYOB, and Hit Run Candlesticks. So Please, anytime we have a members webinar, you all invited. It includes trial, folks. As long as you're trial, you are a member. All right. Make sure you also get the app downloaded from your membership room. Say you're a Hit and Run Candlesticks member and you are not a Right Way Options member, you will not get Right Way Option alerts, and vice versa. Same with BYOB. If you're a member of all three, and some people are, you can pair the app to all three rooms and you'll get any alerts from any of the three rooms. Alrighty, with that, I'm going to say good day to everybody. Thank you so much. I do appreciate you being here, and I hope today was helpful. I really, really do. All right, you guys all take care. All right, we'll see you later.